Hello students, welcome to the second part of fourth chapter of your Accountancy book 1. The name of the chapter is Reconstitution of a Partnership Firm, Retirement or Death of a Partner. In the first part of this chapter, we tried to understand what retirement or death means. We basically focused on retirement and we talked about the things that a partner gets when he or she retires from the firm, and also what does the partner have to give back to the firm at the time of retirement. We made a list of things that need treatment in the accounting books of the firm at the time of retirement. Those were calculation of new profit sharing ratio or the gaining ratio, ascertainment of gain or loss on revaluation of assets and liabilities, treatment of goodwill, adjustment of accumulated profits and losses or reserves, adjustment of capitals, and preparation of the balance sheet. These are the things that are going to be there in this chapter for you, and out of these, in the first part, we learned how to calculate the gaining ratio or the new profit sharing ratio at the time of retirement. We also saw how to treat the goodwill which is valued for retirement. Whenever the partner retires, the goodwill of the firm is valued, or we can say it is revalued. This newly valued goodwill needs to be treated. How do we treat it? We find out the share of the retiring partner out of this goodwill and we give it to that partner. But this goodwill share is given to the retiring partner by the gaining partners. So we need to first have the gaining ratio so that we can debit the gaining partners and credit the retiring partner with his or her share of the goodwill. In the first case that we did for goodwill, we assumed that there was no existing goodwill in the books. Today, we'll begin or resume the lecture by assuming that what if there was already a goodwill. So let us take a look at the scenario and a related example. In case there is an existing goodwill which is appearing in the books, we first of all have to write it off. And how do we write off the existing goodwill? We have already done it in the previous chapter. We write off the goodwill by debiting all the partners in their old ratio and crediting the goodwill account. The logic is very simple. Goodwill is an asset which is appearing in the balance sheet on the asset side, of course. So since it's an asset, it is being written off or it is being removed from the books. An asset being removed or reduced or written off has to be credited. That is what you've learned in the rules for journal. So you credit the asset which is goodwill and you debit the partners. So after writing off this existing goodwill, we'll do the same thing with the new goodwill that we did in the previous class. Let us take a look at the related example for this scenario. In our example, we have Hanny, Pammy and Sunny as partners sharing profits in the ratio of 3, 2 and 1. This is their profit sharing ratio. Goodwill appearing in the books is valued at 60,000. So this is the old goodwill or existing goodwill, as we say. Pammy retires and at the time of retirement, goodwill is valued at 84,000. We can call it the new goodwill. So the old goodwill is 60,000, the new goodwill is 84,000. Hanny and Sunny decided to share the future profits in the ratio of 2:1. So we have the new profit sharing ratio. We have to pass the journal entries. Revisit the question. We have the old ratio of the partners which is 3:1. We have the old goodwill which is 60,000. We have the new goodwill which is 84,000. And we have the new ratio which is 2:1. Now the first thing that we have to do is to write off the old goodwill in the old ratio by debiting all the partners in their old ratio which is 3:1 and crediting the goodwill account with its full value. Thereafter, we have to give the retiring partner his or her share of the new goodwill. So first of all, we find out the share of Pammy. The goodwill of the firm is 84,000. Pammy's share was 2 by 6, which comes down to 1 by 3. So 1/3 of goodwill 84,000 comes out to be 28,000, which is Pammy's share. Now this share will be given to Pammy by the gaining partners in their gaining ratio. So we have to calculate the gaining ratio now, which is very simple. Subtract the old share from the new share. When we do this, we get Hanny's share as 1 by 6 and Sunny's share as 1 by 6 too, which means their gaining shares are equal, which is 1:1, which means that this 28,000 will be given to Pammy by Hanny and Sunny equally, which is 14 and 14,000. So we debit Hanny and Sunny by 14,000 and we credit Pammy by 28,000. So this is what we do when there is an existing goodwill. We first write off that goodwill and then we make the entry for the newly valued goodwill. Now, sometimes there might be a case when we are not given the amount of goodwill explicitly, which is a case where the goodwill might be hidden, as we have done in the previous chapter also. But in this chapter, hidden goodwill is pretty simple. Hidden goodwill means the amount of goodwill which is not given to you explicitly, but you can find it out. How do you find it out in case of retirement? In case of retirement, when the payment to the retiring partner is made in a lump sum amount, then what you have to do is that compare this amount with the amount which was due to be paid to the retiring partner. If this amount is more than what was due to the retiring partner, that means that the excess is goodwill. Let's see what is written here. The amount paid to the retiring partner in excess of what is due to him based on the balance of his capital account after all the adjustments is actually nothing but the hidden goodwill. So you just have to compare what we are paying to the retiring partner and what was due to the retiring partner, and the difference will be the goodwill. Let us look at an example. P, Q and R are partners sharing profits in the ratio of 3:1. R retires and the balance in his capital account after making all the adjustments is 60,000. But P and Q agreed to pay him 75,000. So students, it's very simple. The balance due to him was 60, but he is being paid 75. This extra 15,000 is obviously the goodwill that we are paying to the partner. So now this 15,000 which is being paid to the retiring partner will be treated in the same manner because it is the goodwill that we are paying to the partner. So we'll credit the retiring partner and we'll debit the gaining partners. Now assuming that the ratio remains the same, so we'll assume that 3:2 was the ratio of the remaining partners, which becomes their gaining ratio also. So we'll debit the gaining partners in 3:2 and we'll credit the retiring partner by paying him the entire amount of his goodwill, and the gaining partners will be debited with the respective amounts. So this is how we treat goodwill. We have done all the cases related to goodwill, be it existing goodwill or without the existing goodwill, or be it the case when there is no clear information about the goodwill. I hope you were able to understand how do we treat goodwill on retirement of a partner. Now let us move on to the next very important topic. The next topic is adjustment for revaluation of assets and liabilities. As you've already seen in the previous chapter, whenever there is reconstitution of partnership, the firm or the partners decide to revalue their assets or reassess their liabilities so that they can bring them to the current values, so that whatever gain or loss comes out from this revaluation can be properly treated. The proper treatment of this gain and loss is that all the old or existing partners before the reconstitution are entitled to the gain or are liable to suffer the loss due to revaluation. So whenever we do revaluation, we have to prepare an account which is the revaluation account. What do we do in the revaluation account is that on the credit side, we write all those changes in the assets and liabilities that are beneficial for the firm, which means either an increase in the assets or a decrease in the liabilities, or whenever we find an unrecorded asset. So all these things that actually lead to a benefit are credited to this account, and all those things which are opposite to these things, like increase in liabilities or decrease in assets or finding an unrecorded liability, these things are debited to the revaluation account. After debiting and crediting the changes in assets and liabilities, we find out the gain or the loss by balancing out the account. So there are entries that we have to pass for these particular items that we show on the revaluation account. We've already learned these entries in the previous chapter. Let us take a look at them again in this chapter 2. Whenever there is an increase in the value of an asset, as we already saw, we show it on the credit side of the revaluation account. So we credit the revaluation account and we debit the respective asset account. Similarly, whenever there is a reduction in the value of an asset, we debit the revaluation account and we credit the asset account. Whenever there is an appreciation in a liability increases, we debit the revaluation and credit that particular liability. Whenever there is a reduction in a liability, we credit the revaluation account because it's a benefit for us, because the liability is getting reduced. So we debit that liability and we credit the revaluation account. Whenever we find out an unrecorded asset, it is a benefit for us, so we credit the revaluation account and we debit the asset's name. Whenever there is an unrecorded liability, it's a kind of a loss for us, so we debit the revaluation account and we credit that particular liability. Sometimes there might be an expense incurred for revaluing the assets and liabilities. That expense is debited to revaluation account and credited to the cash or bank account if the firm is paying that. If the firm is paying the expense through its cash or bank account, then we credit the cash or bank account. If a partner is paying that expense, then we credit the partner's account. Thereafter, having done all these adjustments and entries, we find out the gain or the loss. If there is a gain, we show it on the debit side of the revaluation account. So we debit the revaluation and credit the partners individually one by one in their old ratio. And if there is a loss, we do it on the opposite side by crediting the revaluation account, right? So these are the entries that we have to make or pass for adjustment or revaluation of assets and liabilities. Let us understand or strengthen our understanding with the help of an example. In this question, Mitali, Indu and Geeta are partners. They are sharing their profits and losses in the ratio of 5:3:2. We have these assets, we have these liabilities here. You can take a look at them. What happens in the question is that Geeta retires and it was agreed. Now you have to pay attention to the adjustments given below the balance sheet or the main question, because these are the adjustments that are going to give you the amounts that you have to show in revaluation account. These adjustments will tell you what changes have taken place in assets or liabilities. So the first adjustment says that machine is to be valued at 1,40,000. It is to be valued at 1,40,000. Valuing it at 1,40,000 means what? The machine was already existing at 150. Now we have to value it at 140. This means the value of the machine has gone down. It has reduced. It is a loss for us. It will go to the debit side of the revaluation account. Patents are to be valued at 40,000. Patents were earlier for 30,000, which means the value of patents has increased. So that will go to the credit side of revaluation account. Then buildings at 125. Buildings were at 1 lakh earlier. The value of buildings have also increased. So we have to record these and prepare the revaluation account. So now let us look at our revaluation account. Since patents and buildings had increased, we show them on the credit side. And since machinery had reduced, we show the change on the debit side. Remember, you only have to show the change, the amount by which the assets or the liabilities have changed. After showing them, You find their difference. If this side is more, this is the side which is basically showing the benefits. So if this side is more and this is less, that shows the firm has gained because of revaluation. This gain will be transferred to all the partners. We don't care who's retiring or who is getting admitted, as we did in the previous chapter. Revaluation, whether it is a gain or a loss, goes to all the partners, right? All the existing partners in their old ratio. What was the old ratio in this question? The old ratio was 532. So the gain of 25,000, which we obtained by subtracting the total of that side with this side, this gain will be given to all these partners in their ratio, which is 532. Having done this, let us look at their journal entries also. Machine reduced, so we debited the revaluation account. Buildings and patents appreciated, so we credited the revaluation account, and the gain was debited to revaluation account while credited to the partners account. That is what we did in the revaluation account, and that is how we prepare the revaluation account. I hope you were able to understand this as well. Now let us move on to the next step. The next step is making adjustments for accumulated profits and losses, or you can also call them reserves. You have to make adjustments for the reserves or for the accumulated profits or losses existing in the firm's accounts or the books or the balance sheet. So what do we do with the profits and losses? Usually the profits and losses or the reserves are written off. How do you write them off? Reserves, remember, are liabilities because you show them on the liability side of the balance sheet. They are liabilities because the firm, instead of paying the profits to the partners, decided to save them. So basically, those reserves are firm's liabilities towards the partners, right? So since they are liabilities, on being written off, they are to be debited, while all the partners, remember, all the partners in the previous firm before the reconstitution, they all are entitled to these reserves or the profits, right? So you debit the reserves since it is a liability, you credit all the partners in their capital accounts in their old ratio individually. When there are losses, you do the reverse. You debit the partners and you credit the respective losses like the P&L account, right? So this is what you usually do for most of the reserves. In the previous chapter, we have also talked about workmen compensation reserve or fund and the investment fluctuation reserve or fund. I hope you remember that. You might get those reserves also in these questions, right? More or less, the general rule is that you write off the reserves or accumulated profits and losses. How do you do them? If they were appearing on the liabilities side of the balance sheet, you debit them and credit all the partners in their old ratio. And if they were appearing on the asset side, like the advertisement suspense account or the P&L account, you credit them and debit the partners, right? Now, having done all of this, what have all we done till now? We have calculated the gaining ratio. We have calculated the goodwill share which is to be given to the retiring partner. We have also seen that we have to give the old goodwill also to all the partners including the retiring partner. We have to revalue the assets and liabilities, and the gain or loss has to be also debited or credited to the retiring partner also along with all the partners, and even the accumulated losses, profits or reserves have to be written off among all of them. So having made adjustments for all of this, now we calculate the total amount which is due to the retiring partner, and after having done that, we have to make the payment to the retiring partner. How do we do that in terms of journal entries? There can be different scenarios. If we are making the entire payment in cash or lump sum at one go, then we have to credit our cash or bank account and debit the retiring partner. We might not pay the partner right now, we might want to pay him later. So we convert the dues of that partner into his loan because we have to close his capital account. He is not a partner anymore. So we debit the capital account. and we transfer that amount to his loan account. And there can be another scenario where we make certain payment and we transfer the rest of the amount to the loan account. In that case, we'll combine the entries. We debit the partner, we credit the cash for that amount which we are paying to that partner, and for the amount that we are not paying right now, we credit the partner's loan account. Right? That is how you make the payment, or you make the due payment to the partner on his retirement. You dispose of the amount, right? Now let us take a look at another scenario which might happen sometimes, that whenever we transfer the retiring partner's amount to his loan account, the firm might also decide to pay interest on the loan, which is usually the case, right? So we usually pay interest on loan of that retiring partner's loan amount. So how do we make entries for that? We debit the interest account because obviously it is an expense for us, and we credit the retiring partner's loan account, which means that this interest gets added to the amount of loan which is already due to be paid. And then when we make the payment, we debit the loan account and we credit the cash or bank account. So you first debit the interest account, showing that interest has been due, it has been added to the loan account, and then you make the payment of the loan account or the amount due in the loan account. So now students, you've seen how do we make the payment to the retiring partner, what do we do with the interest due to the retiring partner, and how do we finally repay or pay his loan which is due, right? So having learned all these small things that are to be done when a partner is getting retired, now we have to prepare ourselves for good comprehensive questions. In the next part, we will discuss a couple of very good questions that will summarize your understanding of retirement of a partner. So I wish that all of you, when you join the next video, the next part, you come prepared with all these concepts so that you're ready to do two good questions. This was it from today's video. I hope you were able to understand it thoroughly. Thank you.